Hi, let's cover my Elliott Wave scenarios on Bitcoin on the 1 hour time frame. And I'd like to start by talking about the 886 as per the Kate principle, the Kunz 886 principle, where locally on the 1 hour time frame, we are in an uptrend. And the moment you then get a retracement to the downside, you can pull an 886 Fibonacci from the start to the end of that first wave to the downside that creates the range. The moment the 886 is touched, it increases the probabilities to sooner or later take out that high. So that is the directional bias that the Kate principle gives us. Now, very often after touching the 886, price is not just continuing to the upside. No, very often instead you get a retracement to the downside, a bit of a rejection, and that is exactly what we see here. Something that you also tend to see quite often is price moving at least to a golden pocket. It's the same pull from the high to the low, 886 touched, move to the golden pocket. It's something you just see often, but it's no problem if price would move to lower levels. Actually, it would be nicer if it does, because we know the directional bias is towards the upside for price taking out that high, but I don't really have a lot of interest in longing in this area here, where then my TP1 has to be here. I mean, that is a very tiny little RR type of trade, which is not very interesting. And I'm also aware that we do have big resistance just over here, but then it's not even a 1 to 2. So from a trading point of view, it's not really a great area of interest for me. However, if price can retrace to areas of support, like the daily naked point of control or the order block here, or even lower, those are areas where I'm like, okay, could be interesting. I will observe the reaction at these areas of support and look for long opportunities where I aim to at least take out that high and look for higher areas of resistance. Now, because of our bias, it's interesting to look for Elliott Wave scenarios that eventually take out that high. The first one here would be an impulse to the upside of the low here at 108.6k. So we have a bunch of 1-2s here, messy overlapping price action. We get a 3 to the upside on an increasing amount of volume as well, which is something that you like to see. And then you move into your 4s and your 5s. That is a very typical impulsive structure. Preferably you get a couple more highs on decreasing amount of volume, and once your last wave 5 is finishing, you get a retracement to the downside. What you see here on my chart is not on my channel as Elliott Waves Simplified, but also K Waves, because it is something I invented myself a while ago by now, and we are actually creating a full free document of like 10 pages that teaches you everything about this, like K-Waves, the Kate principle. There's multiple things, like a lot more things that are incredibly useful to know the probabilities in either a trending environment or a ranging environment. So that is coming later this year. Now, in this scenario, if we're looking for a wave 4, we don't want price to move down to the 0.618 here at 111.2k, because that basically is an invalidation for your wave 4. It would be incredibly deep. What we do like to see, though, is the wave 4s increasing in time and in size. So if we have a multi 1-2 here, price moves up, we have a 4 and then a 5. Finish a higher degree wave 3, get another 4, which is preferably a bit bigger in time and price compared to the lower degree 4 here, and it retraces to the wave 4 of a lower degree, which it pretty much did. But then higher degree wave 4, and eventually look for wave 5. And maybe there's one more 1-2 here, and you get one more wave 4 and 5, but you get the idea. Basically, what you're looking for here is a couple more highs, decreasing volume, and you want to have that like overlapping structure on decreasing volume into an area of resistance, and then we look for a retracement. Now, on the other hand, we have to consider a WXY. So this move up then has to be a zigzag in a wave A, B, C. Now, of course, your wave C is incredibly extended compared to your wave A. It's not really another great option of counting an A, B, C here, then having an A in here, then B, and then eventually that's your C. Of course, then again, your C is very large compared to your wave A, which does reduce the probabilities of an A, B, C. And I'm also not a fan of putting W over here, X here, and then wave Y over here, and that is mainly because of X. So sure, if we like to call an ABC here in a W, that's fine. At least wave C is not as extended. So ratio wise, it might work better when you're like, okay, we have A, we have B, we have C. However, wave X, we take a Fibonacci from the start to the end of wave W, and we toggle on the fibs, and you can see that price did not even retrace to the 0.236 Fibonacci. You do like a wave X to at least retrace to a 236. Now, commonly, a wave X also in a double zigzag is retracing to at least the 0.382. Like basically, this pocket over here is an area of interest for a wave X in a double zigzag, but it didn't even touch the 0.236, which reduces the probabilities of counting this structure to the upside in an AWX and then a wave Y. Is it an invalidation? No, but based on the ratios and the Fibonacci retracement as well as time, of course, we give it certain probabilities, and this is just incredibly shallow for a wave X. And if we then compare X in time with W, we take a Fib time from the start of W to the end of W. Toggle on the 0.382. Now, commonly, a wave X would finish after the 382 Fib time, as is common in general in Elliott waves. Wave 2 against wave 1, right? Wave X against wave W, wave B against wave A, right? All those corrective structures, they commonly at least finish after the 0.382, which clearly is not the case. Like, it's not even close. So if I want to count this move to the upside as a corrective structure, I would prefer putting that W on the high and then just take the chin on A, B, and an extended C to the upside. Okay, cool. And then look for a wave X over here. Now, again, wave X preferably is finishing at least after the 382, which is this vertical line on my chart, sitting on the 1st of October, which is today, 6 p.m. Central European time. So preferably, price is creating a range here that at least finishes after the 0.382. And this wave X can easily move lower here and move beyond this 618 at 111.2K. This 618 invalidates a wave 4, as long as you at least don't take out this high here, right? So it invalidates a wave 4, but it does not invalidate a wave X. The invalidation for your wave X is basically the low, all the way down here at 108.6K. Now, what you don't want to see for this wave X is price move up beyond the 1.618. So the moment price moves up over here and touches the 1.618 at 116.1K, the probabilities for a WXY will decline, because now we can't really count all of this as a single structure in wave X. Because the moment price touches this 1.618, we have to consider, I mean, the moment you take out this high, you got to consider flats in a wave A, B, C, or WXY. But the 1.618 is a very rare target for a wave B or a wave X. You don't actually like to see this touched. And most of the analysts will say the moment you take out the 1.618, you're not looking at a flat or a WXY anymore. You're probably looking at just a new separate structure. It's not related to this move to the downside. So if price moves up and moves to 116.1, like 2K, that's a problem for wave X. It's not a problem for the impulse, right? It's a problem for your wave X. So it's not something you like to see. In that case, like if you do move up, then yeah, okay, you got to move your wave X over here and you look for a Y and an A, B, and a C. It just means, once again, that your wave X is incredibly short. And sure, time is not an invalidation nor a confirmation, but you know, price is still developing structures, and preferably it finishes after the 382. That is most common. That is what we like to see. It's not a must, but it's by far most common. And in the end, we look at probabilities and what's common and not common, and we hope to create an edge. No? So this is therefore not preferred. The depth of that move to the downside in a potential X, if we like to count that as a wave X, again, it didn't even touch the 0.382, which of course would be nice. At least it touched the 0.236, so that is something, right? So that's something. So at least it touched the 236 absolute minimum target, but time target 0.382, not touched. So preferably wave X is not yet in, and you move to supports at a later stage. Now then we get to the horizontal levels of support and resistance. And at the beginning of this video, I mentioned, I believe, I don't recall completely actually, but I mentioned that, cool, we touched the 886, bias towards the upside, But from a trading perspective, this for me is not a great area of interest. Like, cool, I'm interested to long, and sure, price can move up and look for this resistance, look for higher resistance, maybe even higher. However, this over here does not give me a great opportunity, at least not according to my plan. Now, maybe you have a plan in this range and it works out, and that's perfectly fine. But of course, in my content, I can mainly talk about my plans and how I approach things. Now, my minimum target would be taking out this high, and definitely interesting areas, the resistance we have just above us. However, if I would enter over here, then my RR is very short, right? Where do I put my stop loss? I don't really have a good horizontal level here. So what I would prefer to see is price move down. And it would be even better if it does so without taking out the high, just to be sure. So if price would move to the downside, it becomes interesting to maybe look for an opportunity here at the daily naked point of control, or here at the order block, or at the next level. Basically, I'm just going to check the levels, and each level to the downside for me is a potential long opportunity depending on how price moves to the downside. Of course, I will follow the waves. If price moves to the downside, I keep an eye on the wave structures, as that's my expertise. I look at the other things that are part of my own trading plan. I will observe the reaction at these areas, and if I see what I want to see according to my plan, I will join the party. If that's not the case, I will not look for a long here, and I will look for the next level to the downside. And if I miss an opportunity, I don't care, because there's always going to be a next opportunity. You do not have to be part of the market at every single phase, right? You want to pick the best battles. And the levels on my chart are as follows. We have a couple of new levels because September finished, October started. So we actually have a new monthly naked point of control here, 115,660, as well as from the PVP indicator, the brighter pink one here, 115.8. Then we also have a monthly level down here at 108,247, which is at the exact same level as a weekly and a daily level. So that's quite unique. You don't see that every day. But yeah, these are the volume levels on my chart, and we have the time frame horizontals here on my chart, and then I also have the order blocks. So we have an 8-hour order block here to the downside on the 8-hour time frame. This is what it looks like, right? There's one red candle in the middle of the green ones on your chart, mine the gray ones. And this is a daily order block. So on the daily, you can see here that after this one candle, then price basically moved to the downside. So this is at least a little bit of an order block for me, something to keep in mind, but it's in confluence with, in general, this area of resistance. So, I mean, this order block, I might as well remove it because of all the other levels in here that are actually more interesting, but I still want to just show it. Then we have some news. So Wednesday, the 1st of October, 4 p.m. Central European time. Make sure you trade safe. Little bit of news. I personally generally don't expect much with this type of news here, but Friday should be more interesting with NFP. So again, time Central European time zone. Make sure you trade safe. And then we get to the probabilities, and these are the beautiful probabilities from yesterday. I mean, in general, right, like it's quite interesting actually to check the probabilities of yesterday, and then now with the information that we have, changed them. So of course the main resistances and supports are basically the same. On the 4-hour time frame, I explained in the previous video that basically the double zigzag and the bullish scenario are the same. Didn't cover the 4-hour in this video. Just make sure to check out the previous update. But then here on the 1-hour time frame, observe the local retracement, corrective or motive. Now, from a probability perspective, probabilities are higher. This is corrective. I also posted yesterday in Elite that price here moved to the downside on volume. So you can see price moving down on an increased amount of volume, and the last leg had the highest amount of volume in this structure to the downside. Now, the moment price then reverses, the probabilities increase that this is corrective. Reason being that if we look for an impulse to the downside, 1, 2, 3, 4, 5, your highest volume is preferably in 3, and you create another low on a lower amount of volume. That is by far most common for an impulsive structure. And that is not what we see over here. If this would be a 1, 2, 3, 4, and a 5, then 5 has the highest volume, which is less common. So therefore, due to the volume in the low and price then moving back towards the upside, changing the structure, probabilities increase. This is corrective. Increase to take the high. Touch the 886. Increase probabilities to take out the high. So in general, the probabilities, as we are patient, we waited for price to show us some more, information, right? That is exactly what I showed in the video yesterday as well. Just be patient here. The probabilities, observe the local retracement, corrective or motive. And these are then things that you can keep an eye on, right? What's the volume doing over here? Do we touch the 886, etc., right? So cool. Just make sure you trade safe, enjoy your day, and that's it from me. So hope this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.